and welcome to the program. A very good day to you wherever you're watching us from. This is Smart 24 TV, where we drive your business. And my name is Anthony. Today, here to take you through, of course, it's a Monday, it's a new week and a new day for us as financial markets, because, of course, most of the markets are closed on Friday, and we reopen on Monday to see that we can get our saving and investments moving forward. Now, the show is probably brought to you by Altex East Africa, your #1 private exchange. And this exchange was licensed by the Capital Markets Authority. And so far, it's one of the exchanges that offers you a diversification of products. And now with their new initiative called Zabu, in which they have partnered with MTN Momo, as well as Altex Clearing, they are now bringing you different securities across East Africa. We are talking about treasury bonds in Kenya, Tanzania, and Uganda. Ever wondered how you are going to actually sell that treasury bond that you want to sell, or even buy more if you want to buy? Well, Altex East Africa has made it very easy. Now, by dialing *292#, you can straight away start trading on the secondary market for treasury bonds here in East Africa. And you can transact money from your MTN mobile money onto Altex East Africa and be able to trade with other secondary market participants on the treasury bond market. Altex East Africa also brings you an ETF, or exchange traded fund, which helps you to invest in different stocks in East Africa, at the Nairobi Stock Exchange, as well as the Uganda Stock Exchange. And definitely this is very exciting because we haven't seen it yet so far. And this is one of the things that, of course, has been done to improve accessibility to the markets and the penetration of the markets onto the local person who is a lawyer, a farmer, a student. Anyone can now be able to invest in these particular instruments across East Africa. Altex East Africa market opens at 15 minutes past the hour of 8 East African Standard Time and closes at exactly 15 minutes past the hour of 3 p.m. at, of course, East African Standard Time. Altex East Africa doing something new. Now, the show definitely happens every weekday, Monday to Friday, and we are always here to get you up to date and up to speed about what's happening in the different segments of financial markets. And if you want to learn more, you should stay tuned on the show, because we have a lot more in stock for you this week as we get to, of course, wind up, coming to the close of the year and starting the fourth quarter, rather, of the year 2022, which is very significant as of reviewing performance over the different markets here at the financial markets in East Africa. Now, last Friday, the markets kind of tumbled again. Remember, the analysis now I'm giving is definitely over closing the markets on. And welcome to the for the day's trading on Friday. And being particular about that, the stock markets had 6 USE listed equities participate in trading, which was a good number, at least basing on the number of companies that participated. And the day ended with 5 gainers and approximately 6 losers. Now, Jubilee Holdings came out as a top gainer on Friday with a 3.53% price appreciation, closing at 7,600.8 Ugandan shillings, followed by Centum Investments Company, who appreciated close to 0.65% on the stock market, and Umeme, who also added some 0.45% on its share price, as well as East African Breweries, who added 0.33% on their stock price there on the Uganda Stock Exchange. On the losing side, however, we had National Insurance Corporation come out last after having lost close to 12.07%. That is from 5.8 shillings to 5.1 Ugandan shillings at the moment. Stanbic Bank also further lost close to 1.96% on its stock price, as well as Equity Bank, who lost 0.71% on their stock price, and MTN Uganda, who lost 0.57% on their stock price. Bank of Baroda, Uganda, came back as a top mover, of course, after being pushed away by Stanbic Bank from the most traded stock in the last 3 months on Thursday trades rather, where Friday Bank of Baroda came out with 1 million shares that were recorded on the company, and this was followed by National Insurance Corporation, who also had a traded volume of 192,964 shares that were traded. Stanbic Bank Uganda had about 180,000 shares that were traded, and Cipla Quality Chemical Industries had about 47,200 shares that were traded on the stock market there over the last day of trading, that is Friday. Now, looking at the basic information here, still there's a lot to do in our market, but slightly the volumes have improved, basing on these, of course, participants that we had, and especially Bank of Baroda, who had over 1 million shares. Also, Stanbic Bank had a good movement on the market. However, National Insurance Corporation had a much better movement this time of about 192,000 shares, which is quite something they haven't done in a while. The company hasn't traded stock, at least in a little bit of while, but that Friday trading ended with them having close to 192,000 shares that were transacted. Cipla also is another company that has been rarely amongst the participants, but now Cipla also came back with a gain of, a movement of 47,200 shares that were recorded on the market. Now, Cipla is the only pharmaceutical company or pharmaceutical processing industry that is listed on the exchange, and this is something to look out for if you're out there and you're interested in investing in pharmaceutical industry. Cipla Quality Chemical Industries is the company there for you. Now, MTN did not have any pretty much very slim volume, but a 0.57% price depreciation. Well, MTN had just 9,558 shares, but still contributed to the sum of shares of the day that were transacted, as well as Umeme, who added 0.91 shillings on her stock price, closing the day with 2,200.91 Ugandan shillings as the closing price, and 8,000 shillings as 8,000 shares that were traded on the stock market there at MTN Uganda Limited. MTN is the youngest company to list so far on the stock exchange, just about 10 months old on the stock exchange, and definitely is one of the companies that we are looking out for as well there on the stock market. And basing on this performance, we had an improvement in the volume. Like I've said, 6 companies were able to participate, and led by Bank of Baroda, who had a big share there of over 1 million shares that were transacted on the daily trades on the last weekday of trading, which kind of moved the volumes upwards. And so there was a very good improvement in terms of the volumes that were traded on the stock market here in Uganda. And therefore, we should look forward to more, at least starting this week, more aggressive trading and bigger volumes probably for the weeks to come as well. The stock market generally is not worldwide. Looking at the US stock market, it's still quite volatile. The Nasdaq, the S&P 500, and the Dow Jones are still struggling to keep up with the pressure that is being put on them by the Central Bank of the United States, the Federal Reserve rate. That is, of course, also having the impact on the yields. The yields are appreciating close now to about 4% on average, and still affecting the stocks there in the United States. Well, that is rubbing off back here at the Uganda Stock Exchange as well, and therefore there we need to watch more and more and see where to put the money and where to make things right and play our cards right, and so we can be able to benefit from our savings. Now, the treasury bond market, looking at Bank of Uganda, last week we ended with the yields. Now these are results as per 14th of September. On the secondary market, we had about 11.83% on the 182 treasury bills, 182 days treasury bills, and we had close to about 9.31% on 191 days, that is 3 months treasury bills. Well, still the rates are quite not as high, but not as low as well. Of course, following about 1 week and a half ago, the Central Bank of Uganda, Bank of Uganda, raised the central bank rate by 100 basis points, and that is from 9% to 10%. And yes, we are seeing that is still having a little bit of impact on the treasury bond yields, but not as much yet as we would have appreciated. But still, the treasury bond and treasury bill market is quite competitive. As I've said, the treasury bills 182 days are at 11.9, 11.8%, and the 91 days bills are at 9.31%. And the margin is 3 out of 4, as well as the IBRO at 9.6 and 10.58%. And those are the current rates at the Bank of Uganda. My friend, if you're out there and you would want to invest in the treasury bond market, that market is also open and one of the safest as per risk, of course, and because government is hardly a defaulter. And for starters, these instruments are accessible through different commercial banks, basically the primary dealers mainly, but still other non-primary dealers could also be in collaboration with primary dealers and be able to access, help you access these different instruments, that is the treasury bonds and treasury bills. And when we talk about treasury bonds and treasury bills, we are simply referring to transferable debt to government. And we could have the corporate bonds or commercial papers now translating to corporate bodies. Transferable debt that is offered by the public to these different entities or institutions. Now, when we talk about specifically the treasury bond and treasury bill, a bond is a long-term instrument, minimum of 2 years, and a maximum of 20 years in Uganda. But we have in-betweens of 10-year bonds, we have in-betweens of 3-year bonds, 15 years bonds, and 20-year bonds. And in Kenya, we also have up to 30-year worth of bonds, meaning you can still invest for all that time and be able to get some bit of interest on your savings. Now, these instruments are available through, like I've said, the primary dealers. That is one way, but also the Uganda Stock Exchange has reserved a full market segment towards investment in the treasury bonds and treasury bills. This is called the fixed income segment or fixed income securities. Now, after the primary market, these instruments go to the secondary market, and this is where you find the Uganda Securities Exchange and the primary dealers in the market, and these help you to access. Now, I can explain a little bit on how you get to earn from these instruments and how you can get to actually start your investment within these instruments. Now, like I said, government is a borrower because government needs money in order to finance different projects, in order to finance different government bodies, provide medicines, and so on and so forth. Of course, as a body, government can raise money through different ways, and one of them is borrowing. Now, government can also, of course, collect revenue, and that is the main source. It's assumed to be the main source of government's income, and this is what government uses to finance the budget. But if you recall, for example, in the financial year 2022, 2023, we had about close to 48.1 trillion Ugandan shillings worth of a budget. But the government projected to collect close to about 25 trillion, which is close to a half, right? And sometimes government falls short of its targets, like, for example, in the financial year 2021-2022, government failed to raise all the revenue that it had to raise within the financial year. And of course, it had to push into the next financial year to be able to finance that particular deficit. Now, when government also, besides being able to collect revenue, it can use its mandate as government to borrow money. And it can be able to borrow domestically or borrow from foreigners internationally. Foreigners like the International Monetary Fund, the different other funds that finance government. Now, this borrowing, of course, is not advised because usually it comes at a disadvantage. Government has to pay back this money with very heavy interest. There are conditions through which this money comes. So domestic borrowing is one avenue that government looks at in a way as a source of revenue that can help government to be able to maintain its activity and performance and finance different government activities. Now, when government is in need of money, it doesn't go directly to the public, but rather goes through the Bank of Uganda, which is the central bank. Now, the central bank gets to now announce or auction different bonds and so on and bills. And these bonds and bills come at an interest. Of course, people cannot give you money for nothing. Money has to be returned with an interest. And so the Bank of Uganda gets to auction these bonds. Usually these notices are given on the Bank of Uganda website, or even in daily newspapers. You could always find that there's an auction on Tuesday, there's an auction on this day. Usually every after about 28 days, you have an auction of, for example, treasury bonds. And even treasury bills have a much, they're much actually more frequent than treasury bond. So you have this particular instance where Bank of Uganda is auctioning different bonds. Why do we auction? Because the public selects the interest at which they want to lend to government, and then Bank of Uganda has the discretion to be able to choose which is the favorable interest. Now, amongst the bidders or people who have a say, amongst those people who want to invest and be able to lend to government, we have what we call competitive bidders and the non-competitive bidders. And now we're talking about the primary market. People directly going to Bank of Uganda and saying, hey, I think I can give government 100 million. I think I can give up 10 million. I think I can give up 1 million. So these are called bidders. And in the bidders, we have the competitive bidders or investors and the non-competitive. Now, the competitive bidders or competitive investors have close to, or rather, they have exactly 200,100,000 and above. 200,100,000 and above. Now, this means that you don't have treasury bonds in amounts of 10,000 to or 50,000 in the primary market. You only have strictly 100,000 units. So one unit is 100,000, the next one is 200, 300. That's how it goes, in terms of buying bonds on the primary market. And so when you have these people with 200 million and above, 200,100,000 and above, these are the guys that go to the auction and actually apply for these bonds at their favorable interest rates. And later on, government, Bank of Uganda rather, selects the best bidders. Of course, those that are favorable, not with very hiked interest rates or very low interest rates that could discourage everyone, but those that are moderate and Bank of Uganda thinks that are favorable are given the bonds or the instruments, and the rest are dropped immediately. Now, we also have another category, which is the non-competitive bidders. These are people with less than 200,100,000. Now, those that have 1 million, 10 million, 50 million, or 500,000 whatsoever, come under the non-competitive bidders docket. And this consists of those people that go with whatever interest rate that has been decided upon by Bank of Uganda. That is one way that you can be able to buy bonds on the primary market. And how do you access these instruments? You don't go direct to Bank of Uganda. You have to have an account with one of the following banks. These are the primary dealers. We have Centenary Bank, we have Stanbic Bank, Standard Chartered Bank, we have UBA, that is United Bank of Africa, Absa Bank, Bank of Baroda, as well as Housing Finance Bank, which just joined as well. And these banks help you to open this account called the Central Securities Depository. And with this account now, you can be able to buy and be able to store some of your instruments on that particular account. Now, when you have instruments that are being issued on the primary market, it does not end there. What happens is people who have bought on the first market, that is the primary market, can still be able to transfer. That's why I call them transferable debts or transferable instruments. They can be transferred from one individual to another. So you have now a secondary market where you have the people that have been able to buy on the first market come to the secondary market and can still further be able to sell these instruments to other people at a slight interest there on the market. Now, this is another market that is very interesting and where most people come, because in this market, the advantage is there are no limits. You don't have to have 200 million whatsoever. There are no competitive or non-competitive investors. We are all investors in the secondary market, and we come to be able to buy or sell our instruments. And of course, the rates are determined still by the demand and supply and the like. And this secondary market is where now you can come and be able to buy different instruments from people who already had them from the primary market or acquired them on the secondary market. Now, how do you earn money from this business? Of course, there's a way you can have from the primary market, you come to the secondary market, sell at an interest, and get back your money very quickly, right? Or you can hold the instrument. Now, government has a policy of issuing, for talking about the treasury bonds that are long-term, it issues the interest or coupons twice in a year. Meaning if, for example, an interest rate is 20%, I'm using a hypothetical interest. It's not actually what is actual. But if at all you have a 20%, for example, interest rate or coupon rate, you will have 10% at the end of 6 months and the other 10% at the end of another 6 months until the maturity of that particular instrument. So you will keep earning every after 6 months. You earn 10% of the money you invested. So if you have $1 million, meaning you're going to get 100,000 every after 6 months. If you have 100 million, you're going to get 10 million every after 6 months, and so on and so forth. That is the way these instruments work. And so if you are investing in the shorter term, the treasury bills, of course, you will have the whole maturity period, and then you will get back your initial deposit as well as your coupon or your interest along with your initial deposit. That is for the treasury bills, because they are pretty much short term. That is 3 months, than 91 days, 6 months, 182 days, and 365 days, or one complete year on the maximum. And so that is basically how these different instruments work. The advantage of these, of course, is the fact that unlike equities, these instruments are much safer in a way of alleviating risk with a very limited risk, of course, because government is not a defaulter as is thought of by many investors. And another thing is they help you keep saving, because you have money somewhere earning you some extra income, yet you're going to get back that money after a specific period of time, the way it was, without any losses. So that is a way of also getting to save and get to make money off your savings as well. Briefly, that was it from the treasury bonds. If you want to learn more, you can visit Bank of Uganda. website and find out a little bit about the bonds that are issued. They always put them on their website, and you can always find them there and be able to know when and how much you can trade and how much you can earn from such instruments. We are going to take another quick breather. Very briefly, we return and we will look deeply into the stock market in Uganda, what happened to Stanbic MTN on Friday, and what should we expect coming into the new week. Stay with us, we'll be right back.